Hello and welcome to an all-new episode of the Bitcoin News Show right here on the CryptoCast Network. Thank you, ladies and gentlemen, again for joining us so much. This is, of course, the show where we talk about the weekly Bitcoin news, and there's lots to go over in this week as there are all the weeks. So we really thank you guys for joining, for tuning in. Really appreciate it. We are screen sharing our CryptoCast.net .network website, where you guys can find our YouTube channel, Twitter, Instagram, iTunes, and RSS feeds. We do have some merchandise on there if you guys want to help support the show. And if you guys really want to help support the show and the channel and support content like this, we really appreciate it if you guys could give us a donation. We are screen sharing the QR code for you guys to check that out. And of course, we really do appreciate all the donations and feedback we get from you guys, because this really is a community supported YouTube channel. So we thank you guys for that. And then also we encourage you guys to go check out the Bitcoin 2019 conference over there in San Francisco. It's looking like it's going to be a good one, guys. There's a lot of great Bitcoin speakers on there. It's pretty cheap too. It's like $150. I mean, it's really cheap. So make sure you guys check that out. There's going to be a lot of awesome speakers on there. People from Bitcoin Magazine like Aaron Van Weerdum, Pierre Richard, Dan Held, even Drew. Some of the people that are on this panel today are going to be there. So I really appreciate if you guys want to check us out there. I'm going to be saying hello to a lot of great Bitcoiners on there. So with that aside, guys, let's go ahead and stop the screen share and get right into your quick bit section before we get into the main topic. So a few things to cover, guys, today. We got Bitcoin already outperforming NASDAQ, S&P 500 and gold in 2019. So you guys can check that out. Bitcoin is off to a good start this year. We're really looking forward to where Bitcoin's going to go, but it's already off to a great start, sort of proving all the naysayers wrong already this year, even in a bear market. And then we got Bitcoin fundamentals, probably because these Bitcoin fundamentals continue to strengthen, guys. We got 10x increase in hash rate, 3.5x increase in miner profits, and 70% increase in transactions. And that's just over the last couple of years. So Bitcoin continues its march on the world domination. It's the world domination, guys. It's continuing its world domination here. Then we got we got a couple Bitcoin mining companies. So Bitcoin ATM companies. We got Coinme and Coinstar plans to expand their services of Bitcoin ATMs to across 19 states. So there's actually a lot of Bitcoin ATMs out there already. There's a bunch in my state, bunch in a lot of other states that people know that I know of. So Bitcoin ATMs are really starting to get out there. Millions and millions of them out there now. So really excited about that. Bitcoin continuing again. It's global march, guys. It's really awesome. Then we got Gab, the company. It's pretty interesting. This messaging company. They actually have forked the Brave browser, which of course had that BAT token that was powering it. So that is really interesting to see. They have forked this open source browser and removed that BAT token and replaced it with using Bitcoin and Lightning Network. So make sure you check that out. Very interesting. And then, of course, we had the whole week of delistings, guys, the BSV delistings over there at Binance, Kraken, Shapeshift, Blockchain, bittylicous, and many more people have since delisted BSV. It's caused a lot of controversy in the space, so a lot of conversation about that. We're not going to talk about that too much here. I think that's a little bit less important. Then we got Coinbase. They are now closing their markets in Chicago, guys, and scrapping their plans for a high-frequency trading engine. This is my opinion, just more signs to show that Coinbase is just kind of the AOL of the crypto space, useful for onboarding people and customers in the beginning, but not so useful once everybody is already on board. Then we got Wasabi Wallet making the news headlines again, guys. This great Wasabi Wallet, privacy-focused wallet with coinjoins on there. They just recently released a new version that gives them a boost in privacy, security, and user experience. So we got 20x bandwidth improvement, 12x faster loading times, and support for Tor and hardware wallets. These guys continue to kick ass. I mean, there's really no reason to use any other wallet besides Wasabi at this point. Like, really, I mean, the Green Wallet, and Wasabi Wallet, just two of my favorite amazing wallets, guys. Check those out. And then maybe on my third on the list will probably be Samourai, because here we got Samourai Wallet. They are now working on a mobile coin join. So those are my top three wallets, guys, right now. Really cool stuff. Make sure to check those all out. And then with that aside, let's get into the introductions. I have an amazing panel today. Really excited to bring you guys these people that work every day in the space and love and breathe and think about Bitcoin all the time. So let's introduce them, guys, right here. We got Drew Bansal from, what is this? Unchained Cap. That's what it is. Drew Bansal, how you doing, Drew?
Oh, I'm doing great, Vortex. Thanks for having me on the show again.
Yes, sir. We've had you on a few times. Every time, love it. So really thank you for coming back, man, donating your time. And of course, we got Nick Batia. Guys, we've had him on here as well before. He is basically I like to call him a Bitcoin financial theorist. He's sort of the author of the Lightning reference rate. Got a lot of interesting stuff out there. So how you doing, Nick? Nick Batia.
Doing well. Thanks for having me, Vortex. Appreciate being back.
Yeah, man. Thanks for coming back. Love your articles, man. Keep it up. Lots of good stuff. And then finally, we've had Trey. I guess we've had every single one of these guests on here before, guys. Mr. Trey Griffith, founder of Spark Swap. Trey, how you doing?
I'm doing great. Thanks so much for having me on. It's good to be here.
Yeah. We've had you. We had you back before with an interview of your Spark Swap company. So really interesting stuff, guys. Make sure everybody checks that out. Really good stuff. And you guys just launched beta, or?
Yeah, that's right. We launched our beta on mainnet for Bitcoin to Litecoin trading using Lightning Network atomic swaps about 2 weeks ago. I think it was on April 8th, so maybe 3 weeks ago now.
Awesome, man. You guys are kicking ass. We got to interview you before you even went live. So awesome. Make sure to check that out, guys. Really good stuff. So awesome, Trey. Thanks for being on, man. All right, guys, let's go ahead into the main topics. The first one, of course, we got to talk about. Everybody's talking about it, guys. The Tether stuff. Essentially the New York Attorney General stuff. Essentially, we got a few different things going on here, and so my notes seem to be jumbled up. But essentially, what we got going on here is the New York Attorney General's office is applying for a court order to investigate Bitfinex's suite of interrelated companies, including its umbrella firm, Bitfinex, and the Tether Holdings Limited, for an ongoing fraud to the tune of $850 million. Now, the NYAG, guys, alleges that Bitfinex used the funds from Tether to mask some of this $850 million in losses and customer funds resulting from the potential theft or mismanagement by Crypto Capital. So Crypto Capital is kind of the thing that's in flux here. They're the ones that has been alleged to freeze the funds. And Bitfinex, of course, has gone through a number of different banks over the years, guys. But they did respond. Bitfinex responded, saying that we have been informed that the crypto capital amounts are not lost, but have in fact just been seized and safeguarded. And we're working to get those funds released. So it's kind of up in the air. So let's go with you, Trey, first on this topic. It gets kind of crazy, and we know that. Overall, I don't think that Tether affects Bitcoin too much, though it does affect a bit of its short-term price discovery. What is your thoughts on this? Do you think the Tether is solvent and does it even really matter for Bitcoin?
Yeah, I mean, I think the first thing to remember is we really don't know the whole story here. This is like the very beginning of a story. It does seem kind of obvious that, something strange is definitely going on. I think the interesting thing here, though, is that it seems as though Tether is solvent, and really it's Bitfinex that's having issues and kind of using Tether's reserves to cover it, which I think is sort of an interesting underreported part of the story. I think fundamentally everyone kind of understands the risk that you're taking when you're dealing with something like Tether, and when you're dealing with something like a custodial exchange. I don't know that this is too surprising. I'm hopeful that this doesn't have a huge impact on Bitcoin, although Tether is, obviously extremely important in the price discovery process for Bitcoin. I think the emergence of some other reserve-backed US dollar coins is pretty interesting in how that plays out, because I think a few years ago, perhaps it would have had a much bigger impact than it will have today when people can just go to other alternatives. I think it's sort of wait and see for me, but also, it kind of just continues to reveal the issues with custodial exchanges and any sort of, reserve-backed USD-based coin.
Yeah, and that's a great point, because there are many more alternatives now. There's a bunch of these stable coins out there now, and in fact, USDT actually traded at like 0.96 cents on Kraken at one point. So it's kind of weird. We're still in the Wild West trying to figure this out. But as you say, Tether doesn't even come close to representing the amount of value that it did. I think back in 2017 or 2018, it was getting close to like 40% of Bitcoin's market cap there, and I think that we can safely say that that's behind us. But what would you think about Caitlin Long's comments, where she basically pointed out that the NYAG didn't really throw the Martin Act at Merrill Lynch, right, for doing the same thing back in 2009 to 2012 and a bunch of other banks. What are your comments on that? Maybe this double standard.
I mean, I don't know that it's too surprising. Like, I think with the other stuff we've seen with the state of New York, with Bittrex, I think the state of New York is trying to get things under control, at least from their perspective, and bring things into its jurisdiction. And so, it's not too surprising that they're going to treat firms that have sort of tried to not play ball with the state of New York a little bit differently than those that have. So, I don't think we should be surprised about it. Like, maybe we should, can be upset and, hope that the state of New York applies consistent standards. But, I don't think it's too surprising. I think the biggest surprise to me is just, this is a company that has actively tried to avoid the state of New York, and they're still getting caught up in it. So, it seems tough. And I think New York is trying to position itself as a leader in this space from the regulatory side. And so they're taking actions they think kind of establish that and help protect New York citizens. But I think it's tough to be a company operating in this space when you've got the state of New York trying to do what it's doing.
Absolutely. It seems like they really want their pound of flesh just coming in here, like kind of out of nowhere, years and years later. So interesting. Drew, I'd like to get your comments on this. I mean, who do you think is at fault? Like at this point, I mean, it seems like the Tether FUD and the China FUD, like clockwork, they come around every couple of years when the price starts going up. What are your thoughts on this?
Man, Vortex, I have very little original to say on this subject. I am a little bit out of my depth when it comes to these kinds of discussions, at least from an economic incentives perspective. What strikes me about this whole story, though, is how difficult it is to connect things from a blockchain to things not on a blockchain. And that is what keeps striking me about these issues. That, I mean, the Tether is exactly that. It is a token which represents something outside of a blockchain, a dollar, a piece of fiat currency in a bank account somewhere. And I just think that's really difficult. I mean, you've got this, I mean, once it's onto a blockchain, the Tether tokens can be backed by keys. You can apply the regular rules of stewardship that we've all learned around Bitcoin and other digital bearer assets to them. Yet they have a referent, that dollar, that is just outside of your scope or understanding. It's somewhere else in the world. And it's possible to do proof of reserves in Bitcoin and Tether and all that in a very strong way because they're public blockchains. But that same statement about the thing that backs Tether requires a lot more trust. And I think, as Trey was highlighting, that means we don't know the full story. And that's frustrating because on the blockchain, we do know the whole story. It's right there. Any of us can read it. We don't have to wait for news to come out. It's already happened. And I think it always reminds me of how, proof of work is such a brilliant idea because it is the one way to bring things from the physical world into the blockchain-based world. And that link is energy, probability, and hash rate. It's extremely difficult to do anything else, property, like physical goods, and in this case, even fiat dollars. So when it comes to these things, again, I'm not an expert in stable coins by any means, but it feels like if you're going to try to engineer these systems, instead of just pretending that you can make a hard referent between a token and a real world thing, why not try to build in that incentive in a different way, like the way that something like MakerDAO attempts to do, in which there is no need for some real world referent because the entire thing is, again, right there on the blockchain.
Yeah, very interesting. It seems like, Trace and Trace Mayer and Caitlin Long are really trying to push for this proof of reserves that for these exchanges. Maybe you can put some comments on that, and maybe speaking from your economics understanding, maybe you can share with people why pegs don't work, like especially in crypto for these things that these people just don't understand. They just keep trying to peg things to real world assets. Just really quick before you do that, I just got a comment on what you said, where blockchains are just not designed or meant to secure real world assets. That's just not what it does, and so it's amazing to me that we're still trying to figure this out. And of course it's tough, but that's the reality of the situation, that a lot of these ICOs and these tokens, they raise money on trying to secure real world assets with the blockchain. That's simply, that's simply not what the blockchain does, because you can put in bad data in, and then you get bad data out. So, the only thing that really we can use blockchain to make sure is how much energy was actually consumed. That's the only thing that we can actually really verify when it comes to real world physical reality assets. But sorry, go ahead, Drew.
No, I mean, I think you're right, and I don't have too much more to say upon it. But yeah, energy, and then I think, let's admit it to ourselves, this hallucinatory thing that we've all decided to believe in, Bitcoin and Ether and all the other ones that are out there. They exist and they're real because the token itself is sufficient. In this case, the medium is the message, the map is the territory, the token is the value. And I think the disconnect in Tether is that the token is not the value in theory. The value comes from this other thing that's just not connected to it very directly.
Yeah, great points. We got someone in the chat saying pegs work until they don't. Absolutely correct.
Sure.
All right, so let's see here. Nick, did we go with you yet on this topic? Oh, Nick, please, I want to hear your comments on this, man. I've been last but not least, we got to hear Nick Batia's comments. And let me ask you, do you think, Nick, do you think that companies like Bitfinex will continue to have these banking issues in the future, because they supposedly had $850 million, froze? And it's what is your comment on that? And maybe this whole thing is so circular, where it could be the state that caused the dang thing in the first place, and now the state's coming in to to scrutinize the thing that the state screwed up. So what are your comments on the crazy circularness of that? And then, of course, will we continue to see these issues into the future with banks freezing crypto assets or crypto-related assets?
Yeah, I think that banks are definitely going to continue having issues with their relationships with crypto exchanges, because the exchanges are going to have pressure from governments. The banks are going to have pressure from their governments, either not to or to report everything that's going on in their relationship, or just to flat out not do business with crypto exchanges. I think it's a pattern we've seen all around the world. We've seen it, now in the United States, and we've seen it for a long time, starting with the BitLicense. We've seen issues in really different countries around the world where the governments are going after the banks for having relationships with exchanges. I think that will continue to happen. And the stablecoin is a way for crypto exchanges to try to get around these things. But like you said, it's a peg only until the peg breaks. The peg isn't actually physically related in any way to the underlying. It's just a counterparty relationship. So when you own a stablecoin, you're just owning counterparty risk to whatever entity issued that coin. And I just think that we'll continue to see. The good thing here that I'll say is that I do think that we're in a post-Tether world where we can see that Tether and this huge news that comes out, it doesn't really move the price more than a standard deviation. This wasn't a big event if you look at the chart. And I think that that's encouraging. It means the market is probably in this post-Tether world where it doesn't matter as much. I'm not saying it doesn't matter. Maybe similar to Bitmain, where we were at a point, maybe a year or two ago, where Bitmain was getting more and more dangerous. And now I think we're at a point where it's getting less and less dangerous as time goes, because the market reacts in ways where competition will come about. We see what BTC Pay server is doing to the legacy payment processing industry. We'll see that stablecoins will continue to replace Tether. And I think we'll see mining operations that continue to replace Bitmain.
Yep, great. It seems that you're saying that the ecosystem is somewhat resilient as it continues to go, because this game theory and this incentive. This is what continues to hold up Bitcoin, is this incentive. A post Tether world. I really like that phrase, because that's what I believe we live in as well. And this news, like you say, didn't really move the markets much. Like it seems that bad news moves the market a lot more in a bear market, right, than in than any other market. So it seems that maybe we're not that much in a bear market. I try to take the stance to right now we're very much in the accumulation stage, and we're out of the bear market. We're into the accumulation stage where we can go sideways until we can get into a bull market. So I think that's further proof of that. So that's interesting to know. And also, like how I see this is, I think I see this. I think Nick, you said this, but I think I see this as well, where this is really like the state trying to delegitimize crypto a little bit as well as get their pound of flesh, because they really don't like, at the end of the day, they really don't like stable coins as much as we think they do. They do like their control. And I think an important part to remember from this story is that really, again, guys, this doesn't affect so much the security model of Bitcoin. If Tether went down, this is more temporary price discovery, which in theory affects its security model temporarily, but in the long term, guys, this does not affect Bitcoin. So I think that's an important point. And also, I just saw some tweets that the token analyst is reporting that over $200 million of BTC and over $100 million of Ethereum all got withdrawn within the past few days from Bitfinex. So we'll have to see how that plays out. It definitely spooked the market a little bit, this news. But again, as we see, the Bitcoin price is holding quite strong. So we'll see how that continues to play out. So let's go ahead and move on to the next topic, guys. Thank you so much. Again, we really appreciate everybody joining. If you guys didn't see us live, make sure to join us in the comments. The chat is going. We thank so much everybody in the chat, doing good. And if you guys want to give us a thumbs up, we really appreciate that. Subscribe if you guys are new, and if you're listening via the audio, I really appreciate a review over there on iTunes. That helps us get more stars, helps us get more views, helps us get Bitcoin into more people's ears. So thank you guys so much for that. So let's go ahead and go to our second topic here of the day. We got TD Ameritrade, NASDAQ, and E-Trade reportedly preparing to offer BTC trading. Now, this is basically following news that the broker TD Ameritrade is testing BTC spot trading. Trading platform giant E-Trade is now reportedly getting in on the action. According to sources, E-Trade is preparing to support Bitcoin and ETH trading to its 5 million customers, and this could be interesting. Charlie Lee even commented that it's paper trading right now, right? That they're testing out, but there could be more coming. So maybe my first question. Let's go to Drew. Let's go start with you first. What are your comments on these big companies testing this trading? Because a lot of people are like, oh, it's just paper trading. Oh, they're just testing. But could this lead to something more than just the paper trading?
I mean, I have trouble believing a company could actually do the work to implement a paper trading interface, which you might argue that it's just paper and therefore it's not a big deal. But as anybody who's built software or products like this knows, no, that's the hardest part, is getting the interface and building all out. If you're willing to invest in that, I think it's a very, very serious sign. It's also really just a positive sign for the market that this is happening. So I'm bullish. I'm excited. I have lots of paranoid custody nerd questions, like, where are the keys? How are you going to store this stuff? And I'm sure Trey has opinions of his own on this. It feels like we're all now in an era where regular exchanges are kind of common hat, and we get them, and we're thinking about things like distributed exchanges and continuing to want to hold our keys. And it's nice to hear big companies coming in saying, hey, we want to get into the game, but it feels like they're 3 or 4 years ago in the way that they're approaching this, right? They're not custody first. They're not thinking about users and keys. They're just trying to get into the trading game. So I'd love to hear from Trey and his reaction from a custody perspective on some of this.
Yeah, absolutely. Yeah, Trey, please. I'd like to hear your thoughts on this, because I mean, a lot of people were saying that, oh, it's just paper trading. But I mean, again, as Drew said, this is some serious stuff. If they're going to do this, then maybe they'll eventually start doing the underlying as well, right?
Yeah, I think the TD Ameritrade news is interesting because they didn't really promote it, so it almost seems like they weren't sort of ready to reveal anything yet. Whereas E-Trade kind of came out and said, we're trying to support spot trading. I do think, I have kind of the same questions about what is the custody going to look like. I think we've seen some more traditional financial institutions really struggle with the custody requirements and how something like custody of Bitcoin plays into the existing regulatory structure that we have. Not to mention sort of my own questions about beyond the regulatory structure, like what do I as a user get when I'm trading these assets? And I think spot trading for that reason is much more difficult than something like derivatives trading that we've seen be successful so far. I think in the long run, something like like non-custodial exchanges, obviously SparkSwap I think can fit this role, but I think non-custodial exchanges more generally will actually kind of help some of this institutional stuff, because right now the existing ecosystem, you have this basically players that are doing a combined role of being an exchange and a broker and a custodian and a clearinghouse and kind of everything in between. And I think that as we build these kind of better tools, some of these institutional players might get more comfortable with the idea of having a custodian that's separate from the exchange, that's separate from the broker. And I think that could, potentially give a lot more comfort to users as well. But I totally agree that the custody aspect of this is probably the hardest part, and especially how that plays into the regulatory stuff.
It does feel like the non-custodial exchanges might have it a bit easier. I mean, and that's how it's supposed to be, right? And so I think that companies like yours that that combine the best of both worlds, right? The best of non-custodial, the best of custodial. So it's not fully centralized, it's not fully decentralized. There's somebody that somebody can call, right? Like, and like same with like HODL, right? Like they hold one of the keys, so that there can be a dispute that can be raised, and there can be some resolve there. So it is interesting to see. Do you see that? Do you see them figuring this out within the next 3 to 5 years, or is it going to be, do you think, sooner than that?
I mean, I think that someone will figure it out. I'm not certain that it will be kind of the big existing players that really figure out how to do this, but clearly there are a lot of existing players that have figured out ways to build businesses in this space, and I think someone will figure out a way to bring on kind of a more mainstream user into being able to, buy and sell Bitcoin. I think that's going to happen. I think that's already happening today. I think the regulatory structures are definitely going to need to be worked out, and I think that will be a disadvantage for the existing players. But yeah, I think within the next 3 to 5 years, we'll see some pretty major moves into making Bitcoin more accessible to the mainstream and also more accessible to kind of institutional investors.
Yeah, I mean, this does kind of seem like a bit of a sign of Bitcoin going mainstream, though. Of course, could be argued it's more going institutional than mainstream at this point. But we'll have to see. Nick, let's get your thoughts on here. Nick, what do you think about this? I mean, do you think that this paper trading is going to hurt Bitcoin overall? Do you think that they're just going to go to the underlying at some point anyway? And is this a sign of? Is this like just further signs of both mainstream and institutional investment coming in?
We are seeing a trend towards institutional adoption. But I will, agree with Drew and Trey both that they're saying we still are in a stage where we're not sure about all the details. We've had announcements from Goldman Sachs, Northern Trust last year. Both have said we're exploring custody, radio silence since then. Fidelity has, announced that they are actually starting to roll out their product to certain institutional clients. So I am encouraged by some of those headlines, but anytime I see something like the E-Trade or TD Ameritrade headlines, I'm always reminded that they are the ones with the FOMO. They're the ones that are behind the curve in terms of getting some of these products up and running. And they're looking to companies like Coinbase, even though, I agree with you with this whole AOL analogy. I think that's a great one, but they're looking at companies like Coinbase and looking at the venture funding that they're getting. And they're saying that this is a trend that we are late on and we just have to play catch up. So they're not probably security first, custody first, multi-sig first, like some of the really good actors in the Bitcoin custodial space. So, we look to those companies for leadership, like Unchained, what Unchained is doing with some of their multi-sig product stuff. That's the stuff that's exciting. This whole institutional adoption, we can watch it, we can be wary of it, and really the proof will be in the pudding.
Absolutely. Yeah. I mean, I keep trying to remind people it's early days, guys. Look, the institutionals are all the investment. They're all looking at this. Everybody's looking at this, and this is going to play out over decades. There's a lot of stuff still to do, but what we do see for sure is, these large companies, both institutional and small companies, they're exploring, they're rolling out very preliminary early versions. We're building still the pipes before we even put the water through the pipes yet. So there's a lot of this stuff still has to be built out. And I was really thinking that during last year and through this year is when a lot of those institutional pipes will have the water, so to speak, be run through them, and where they really can start shining, more in 2020, 2021 kind of area, sort of towards maybe the height of this particular bull market we're about to find ourselves in. I think that's when they're going to really roll out the big stuff, and we'll be ready, really to start rolling out more stuff like that. So that's going to be interesting, and really a great point about, we have to look to some of the leaders in the space, maybe like you mentioned with Drew with Unchained Capital. Then you have like HODL HODL and Casa HODL, right? With they have some of the best in class as well. Multi-sig kind of technology that you can use. And so some of these big Bitcoin companies is where I hope that these some of these big players will eventually start looking to once the FOMO is over and they need to get everything secured, right? I hope that they start looking to those people because we have to praise them and give them all the attention that they can get, because this stuff is not easy. This is new technology, and these people are developing this stuff as they go. And some of these companies, like you said, Nick, some of these good companies really, really do have the technology long term in mind, and that's, I think, really, really visible and really easy and clear to see, in some of these Bitcoin companies. So hopefully, with moving forward, we can rub off a little bit on some of that. But again,
one company, Vortex, that is showing that they are security minded first is Fidelity, because if you read their blog and the paper that they put out at the beginning of their custody, Fidelity digital asset brand umbrella, it is very encouraging. So we will wait and see whether or not they do have that type of product once they go live to the masses. But yeah, I think it is important to point out that some companies are making a good faith effort to explain to Bitcoin that we belong and we share an ethos with you, and others maybe not so much. So we're always cautious.
Just a point on to follow up on what Nick just said. I think you're absolutely right. Out of all the quote unquote big institutional players that are trying to get into the space, I agree that Fidelity has absolutely taken the best approach to security. But I also believe that that's something that did not start recently. That's been a years-long journey over there. And I know some of the engineers that have worked on that product, and I've spoken to some of the folks at Fidelity. You cannot just decide you want to get into security and do it. You cannot just buy some team and then suddenly be good at it. This has to be something that the institution internally has been cultivating in the team that's going out and building this product. And Fidelity definitely has been doing that for several years, which makes me believe that they're going to do it right. Now, are they doing it in all the possible ways that I might do it in terms of multi-sig and sharing keys and all this? No, but there's certainly stages and stages past where at least what we're hearing out of TD Ameritrade and E-Trade right now.
Yeah, that's great points. I mean, Fidelity has been pretty transparent about their love of Bitcoin. I mean, they even said, I think you mentioned it, they even said that they were mining back in 2016 or 2014, I think so, years and years ago. So I do, that's true of all the institutional investment that at least has been announced. We do have to give props to Fidelity for their transparency in their wanting to do this and bring this product live to customers, because there's just huge demand, guys. Look, let's just make that as a final point for this topic. There is huge demand for Bitcoin and crypto, and that's not going to go away anytime soon. So whether that's custodial services, lending services, this is the future. This is how the world is going to work. So I don't foresee this taking too long before Fidelity really and these other companies kind of get their stuff together. Again, guys, this is going to play out over decades, but I'm really looking for some of the stuff to play out over in the next couple of years. But this stuff plays out over years. You don't just launch a huge global financial product and then just everybody jumps on board. This isn't like a Google version update or anything like that. This is money. This is people's money. We're talking about custody, and so it's very serious stuff. All right, so with that aside, I think we can go on to the final topic, guys. So again, thanks so much, guys, everybody, for joining us. We really appreciate it. Thanks to our guests so much to donate their time and their opinions on this. This is some pretty complicated stuff, and these are pretty busy guys. So we really appreciate it. Let's go ahead and move on to our final topic of the day. Lightning Labs, guys, has you all know them and love them. One of the three main companies working on Lightning stuff right now. Lightning Labs, at the protocol level, of course, working on the protocol level stuff. Lightning Labs desktop application is live with new features, including Neutrino and Autopilot. This is a pretty big release, guys, for me. So because of this Autopilot and because of this Neutrino, Autopilot, of course, makes it easier to connect to nodes to set up channels and is now used by default. Which is really cool. Autopilot is something that they've been working on for a while and are going to continue to improve. Very interesting, having to do with routing payments. And then eventually, when combined with Lightning Loop, you can actually top off and empty channels without any new on-chain transactions. And then when you combine that with splicing, you can even create new channels without any new on-chain transactions. So this is where this stuff is going, and you can sort of see how it snowballs. We create one thing, we use that to create the next thing, we use that to create the next thing, and we call these things usually cryptographic primitives. So this is really interesting to do. Then Neutrino is a really interesting product as well, because that is a light client specification that allows non-custodial Lightning wallets to verify Bitcoin transactions, which is a huge win for mobile wallets. It means you don't actually have to download the entire blockchain. Now it's somewhere in between, right? Like custodial and running your own full node, but it's not full run your own node. It's not full custodial. It is non-custodial. So that is really cool. But of course, with the network, you're still trusting a little bit. But in my opinion, this is really a big win and a great balance between the two things. So let's go with Nick first this time. Nick Patia, what is your comments on this release? I know, of course, none of us are developers, but we can use this software, this stuff, and of course, with Trey might be a developer because he's doing some interesting stuff with Lightning. But look, what is your comments on this? Do you see this, Nick, as a big leap forward? And do you see this? Do you see this as kind of almost proof that Lightning is just the farthest from stagnation you could ever imagine, like Lightning and Bitcoin in general?
Yeah, the Lightning Network development and from the different implementations, from the different wallet providers has all been extremely fast, very encouraging, and very exciting. Lightning Labs is definitely leading the way here. I feel with their software team and their product releases. So I'm very excited about this particular release, as Lightning Labs is going to now try to take over the desktop. What I'm most encouraged about are their announcements regarding getting to mobile, so iOS and Android. It sounds like we're almost there. Almost could mean a couple months. It could mean 6 months. I honestly don't believe it means more than about 6 months. And so just seeing the momentum that the whole Lightning community has, and especially Lightning Labs, very exciting. And we're really now approaching the point where people are going to be able to use Lightning on their smartphone very easily in a non-custodial way. And that is the dream here in Bitcoin, as we want to be able to market Bitcoin as an amazing store of value and something that's secure. But we also want to be able to market Bitcoin as instant payments with that sound money based layer underneath it. And this whole instant payments on the go is now possible with Lightning, and we're pretty damn close. So I'm excited about that.
Yeah, absolutely. I mean, the desktop version, of course, is still really early, like, alpha version, right? 0.05 or 0.5 something. But like you say, I think you can see the steps that they're making. I mean, see Lightning, Blockstream's implementation, see Lightning with their amazing modularity and their awesome front end API stack for web developers. And then now you have Lightning Labs with their awesome wallets. I mean, guys, when you combine all of these teams working on Lightning together, it does seem like we can continuously see progress with each new update. And this one, boasts some pretty big UI improvements. Nick, maybe do you have any comments on the UI at all?
Yeah, it really does look nice. And, one of the things I did want to mention, though, is the autopilot. The autopilot is going to be great because now Lightning Labs is going to be able to iterate off of it. So I don't think that they're coming out and saying, the autopilot function is now working and it's perfect. They're actually saying the opposite. They do say, in their release that you can lose all your funds and you need to be aware. So they're making all the right disclaimers, but they're going to be able to use these people's user experiences and iterate off of that and improve the autopilot and just improve the whole experience as we go. And you're not going to be able to get that feedback until you release software, and they've done that.
Absolutely. So great points on that. Let's go with Trey next. Trey, well, what are your comments on this release? I know you guys, of course, work with Lightning as well, pretty heavily with your exchange. So what does this release mean to you? And then what do you think it means to the general ecosystem?
Yeah, so I mean, I think for me, the big headline here is Neutrino. I think people really underestimate the ability to work on Lightning without having a full node. I know for our software, that is a huge blocker for a lot of people, just because getting set up requires a lot of time syncing. It's very expensive. And so for some use cases, it really just doesn't make sense to run a full node. And if you can have a light client like Neutrino that sort of retains a lot of privacy and retains a lot of the security aspects of running a full node, I think that's a really big improvement. I think the other thing is, just overall with this application, it's really trying to mimic the experience of a lot of the more popular custodial Lightning wallets, that have just, they've gained adoption because they're just so easy. And I think that, with the combination of Neutrino and Autopilot, it's really trying to get this non-custodial experience to the point where it can be at parity with the custodial experience. The other thing I'd like to point out about this application is, and you mentioned this a little bit, but the user experience of Lightning channels, I think that's kind of that's something that we face, and I think it's certainly something that everyone who's worked on Lightning has faced, is just how to explain to the end user what a channel is and how it works. And I think that this release is sort of another nice iteration on kind of how to communicate to users what a channel is and what it means for them. So I'm excited to see people working on kind of the user experience of channels. And I think, we'll continue to see kind of improvements in that area. But yeah, that's, I think this is a great step. And I think it's, the really important stuff is like the underlying pieces like Neutrino that then you can use in applications like this desktop app.
Absolutely. I mean, these non-custodial, I don't think people realize how difficult it is to create these non-custodial experiences that mimic custodial experiences. This is really, really, I mean, this is what Bitcoin, this is what Bitcoin, this is the ethos of Bitcoin in general, is to keep things decentralized, to keep things non-custodial, to keep the end user in control. And that is what I think these teams on Lightning are doing. They are keeping that ethos intact as much as possible, and that is what's really important. And you can build services like yours, like SparkSwap over the top of this stuff, and that to me is really, really fascinating. I really like in this particular wallet how they put the advanced settings in like this dark mode, right? When you go into advanced stuff, the background becomes dark, and it becomes maybe a little bit foreboding. What are your thoughts on how they do balances, on how they do balances and how they put the advanced settings in the background? Do you agree with this? And do you agree with their current way that they convey the Lightning balance?
I can't say that I've spent too much time in the advanced settings of the Lightning app, although it sounds nice. The balances I think are interesting. Like, I don't think it's perfect, but I think that we've had our own struggles with communicating to users, like, what does it mean to have a balance in Lightning? And so I think this is a good take on it. Like, I think this is probably the best take on it I've seen. And yeah, I'll just be interested to see kind of how this evolves over the next couple months. I think as Nick mentioned, like, the only way you can improve these things is by getting it out into the world and getting feedback and seeing how it works. And I think it'll continue to evolve. So I think that's the most exciting part.
Just so many iterations. People don't realize how many iterations it takes, guys, to get this right. But we are iterating. There are more and more versions, and this is all alpha level stuff. Let's just remind everybody again, guys, Lightning is alpha level stuff here. So this is really new stuff, really bleeding edge stuff. And again, the people are working on this stuff because they're passionate. They believe that they can create this user experience on the top of Bitcoin, in the ethos of Bitcoin, with decentralization, with non-custodial, and they're making it happen with every new release. So this just great to see. So great props to C Lightning, to Lightning Labs, Blockstream Lightning Labs, and of course maybe a little bit to Jack for investing into Lightning Labs. So that's props on that. Let's go with Drew next. We didn't go with you, Drew, yet on this topic yet, I don't think, right? So let's go with you on this. Regarding the UI improvements, first of all, what are your thoughts on this new release? And again, kind of what does it mean to you and to the ecosystem overall? And what are your thoughts on this UI change to sort of convey the Lightning balance in this manner of a percentage based of your total Bitcoin balance?
Right. So I actually spent this whole morning playing around with the app. I downloaded it and kind of started running it locally on my machine. And yeah, I was really impressed by the UI. It's very simple. And I think furthermore, it's opinionated, which I think is appropriate for the kind of piece of software that this is. This is not a piece of software for Trey to run to support his business. It's a piece of software for a consumer to run at home on their laptop. And I think it's right to make it opinionated. As a pro user, if you want, I was a little bit weirded out. And I was like, wait a minute, you made that decision for me. I put in a little bit of Bitcoin and you decided that 95% of it was going to go into a channel. Like, that's a bit odd. But at the same time, I'm in the industry, I'm a developer, et cetera. I can go use a different tool. I think for someone that, is just trying this out for the first time and isn't super technical, perhaps, it is the right approach to be opinionated in those ways. So I like all of that. I'll also underscore, though, that I think you're right, that this is super, super early. I'll reveal I actually couldn't get the app to work for me today in mainnet. I think it was throwing a lot of DNS errors trying to find various nodes out there on the network. So it could be just a configuration or networking problem. I'm sure it will get fixed. I was able to get it all working in testnet, which is mostly where my feedback is coming from here. But I really applaud the team, because at Lightning Labs, they are solving both problems. They are writing software that is intended to be used by businesses, like SparkSwap, like any large exchange that wants to do this, but they're also trying to release software for the other side of the network. And I think Trey already covered quite a bit the neutrino part. Let me talk a little bit more in depth about the autopilot, because that's like a feature, frankly, that's really near and dear to my heart. That ever since I read about Lightning, I sort of was like, okay, I can accept the theory of how all these channels may work, and there's a huge amount of complex engineering required to make them work even better. But I'm less of an expert in that. To me, the thing that jumped out right away was, what is the Lightning network going to look like? right? The topology of the network. How is it going to be connected? Because a huge part of what makes it useful for routing, decentralized, but at the same time efficient, is going to be balancing different desires. The desire to be maximally decentralized for privacy, but also desire to be maximally centralized for throughput. So how is and given that it's a non-custodial, leaderless system, just like Bitcoin, how are we going to engineer that? Typically, when we engineer networks, they're always top down. So Autopilot is one of the first, offerings on a way to actually try and, at least simplistically, do something to control the topology of what that network looks like. When my Lightning app booted up, it immediately went and picked someone, and it did that using Autopilot. So digging into that, it's an extremely interesting question to me. Well, how did it do that? And it turns out the algorithm that it uses currently is a really, really simple one. It's the Barabasi-Albert model. It's a modified version of that. It touches on some of my own research from like 20 years ago when I used to be more of a scientist. So again, it's near and dear to my heart to poke at this stuff. And I think my first reaction was, Barabasi-Albert, that's definitely not right. And I think the whole Lightning team would agree it's probably not right. But it's also exactly the right first choice to make. And I think it really illustrates how the team there is doing a really smart job sequencing their work, that they are solving some of the really important problems first. And as much as I care about routing, it's probably not the most important work to do. Probably getting channels to scale a little bit better, getting more degrees of freedom around their management is more important at the moment. And so the team has gone with, a pretty simple first choice on the routing part. And I think that is appropriate. Again, this is consumer software. And it may, this particular app is consumer software, and it may make sense to adopt a simple routing algorithm like that on the consumer side, and then allow businesses who are more reliant on the Lightning Network at scale, who are perhaps operating hubs or who are operating decentralized exchanges, to do their much more sophisticated approach to routing that is appropriate for them. So again, I really just appreciate the smart, I don't know if you want to call it project management or roadmap planning here, to really try and get out the things that matter first, and then solve hard problems later. In particular, if you go look at some of the history of this exact choice to use Barabasi-Albert for the autopilot, you can see this really cool GitHub issue, which someone filed, basically having my reaction saying, hey, okay, that choice is a pretty simple one. Are you sure you don't want to do something a little bit better? And I love Roast Beef's reaction. It's just like, yeah, we should do something better. You should start experimenting and figure out how you would like to make that better. I got all this other work to do over here. And I think it's exactly the right approach, because worrying about the topology of the network at scale is frankly, I think, a luxury. I think right now the network just needs to start scaling a little bit, and then we can have those discussions. For what it's worth, thinking about this from a little bit of a more far future perspective, which by the way could literally be 6 to 12 months away. Thinking about it from that perspective, what I'd like to see is an algorithm that's a little bit more nuanced than something like Barabasi-Albert, which tends to, if there's hubs in the network, they tend to attract each other and they tend to get connected. Like two big hubs will get connected, just like two big hubs in an airport routing network, like Atlanta and Chicago are going to be super well connected. And that sounds like a really good property, and it is for certain things, but it's also a negative. That now if hubs drop out of the network, like imagine if Atlanta Airport is not available for the day, like the network itself can grind to a halt, because that turned out to be such an incredibly central routing destination for so much of the traffic. And I think what needs to happen to avoid that is something that network scientists have understood for a while, that if you want robustness in addition to throughput, beyond hub attraction, you need some incentive mechanism or a rule of growth that causes hubs to repulse a little bit. That they need to have some degree of inter-hub avoidance to be able to create alternative paths in the network, which then create robustness as one of those hubs drops out. And again, this is something Roast Beef and the team are intimately aware of. They know about these properties. They're just choosing to make a really simple first step. And again, I think that's the right approach. But I'm excited to see what happens over the coming years as people get more sophisticated about this and the network grows and grows.
Absolutely. And again, guys, Drew is, of course, a physicist, so he's going to understand this stuff. But this is important. Like, there is decades of research. Like you mentioned that algorithm, Drew. I mean, guys, we've been trying to scale networks since the 70s. This is we got it mostly figured out on how to do things. And I think that the Bitcoin core team continues to apply those principles, and now the Lightning teams are applying those principles, as Drew just pointed out. I mean, just beautifully. Like, that's exactly a perfect example. Just like how Satoshi wanted to use Schnorr but couldn't because of the of the copyright. It's like we clearly made the best decision possible at the time with long-term scenarios in mind, right? So that is what they're doing here. So they're playing it safe, and to me that's beautiful. And I love that comment, Drew, you made. I mean, look, Roast Beef's comment. I mean, look, this is the way it is in a decentralized environment, guys. Any problem you find is your problem. Okay, any problem you find is your problem. And I think that a lot of the entrepreneurs, would agree with that. I mean, I think everybody's entrepreneurs here that is on the panel today. Look, this is how it works. I mean, if there is a problem in Bitcoin, you can make $1 billion company out of that, most likely. So, and if you can't, then maybe you can, contribute at least some to fix that problem. That could lead to another $1 billion company. So this is how open source development works. This is why I love free open source development. It's really, really great to see this meritocracy and people, like Drew bringing up these points that, look, the best decision was made. Like, you can clearly objectively say that was probably the best decision to make for that algorithm, based on data. It wasn't so much like, oh, I like this one better than this one. Nothing like that, guys. These are scientists. Okay, these are freaking data scientists, network scientists. This is the type of people that are making these decisions and that are working on this type of stuff. And I think it's another important point to remember that, again, there's trade-offs. There's always trade-offs with everything that you choose when it comes to networks, when it comes to distributed networks, when it comes to protocols, when it comes to scaling. There are always trade-offs. And so I think that's just a really important point to remember. And again, autopilot, guys, that Drew mentioned here, that's on by default now. Like that to me is kind of huge. That's on by default now. So that shows how comfortable the team is with where it's at right now, is that in alpha 0.5, we can now stick that on by default. So that is to me a big milestone in the overall of things. In the short term, it's not, right, but in the big overall term, where you can look back and say that was absolutely a large milestone. And now, Drew, I don't know if you know, but even wallets now, I've been hearing a lot of Lightning wallets are now auto balancing channels for people. Like that is another step forward, guys, in this, making this just simple, stupid. Of course, guys, the goal is going to be to make everything in Bitcoin Lightning simple, stupid, available for the mass market, obviously. But that takes time and iteration. Most important, iteration, guys. Iteration. So I think that was really, really great. Maybe just one final comment for question for you, Drew. It's probably an impossible question, Drew, but like, how much complexity is too complex, right? How much do we hide away from the user? Because there are some complaints that maybe like now users, they wouldn't understand channels. So, oh no, but look, guys, I don't know if, do you think that users need to understand channels in the future to use Lightning? Because I would argue that they don't, just like they don't understand routing tables to use the internet. But what are your comments, Drew?
No, I think I tend to agree with that. In general, I'm not a good designer of user interfaces, and I tend to not design our user interfaces because I always make them too complex. I always make that mistake. And I think, again, it's a separation. There's a reason that the complexity exists. I think companies who operate in this space are going to require that complexity, but they're going to be using different tools. And I think you're right. The end user ultimately is on a way different set of constraints, and they don't have to operate as efficiently as a Lightning Hub operator or someone else in industry, and probably not taking away, but hiding by default certain options is the right approach. And hey, this is all open source. They're free to get more educated and more sophisticated and go grab another piece of software, probably also put out by Lightning Labs at the same time. So I think I like giving users that choice, and starting them out on something that feels safer and makes it harder for them to make a mistake is absolutely the right way to start.
Yep, great points. All right, guys. I think we'll just go through one more, just finish this topic off. We'll go through everybody one more time. Trey, any final comments on this topic or any of the other topics?
Yeah, no, I mean, I think I agree with the how you display channels. I think this is one of the really hard problems, and I think that over time it will definitely get to a point where users really don't need to know about this stuff. The same way that, like you mentioned, there's a lot of kind of underlying details to the internet that in the early days people really had to understand, and they had to manage those things themselves. But over time, you can build tools and systems to kind of abstract those things away. I think that's going to happen. I think it will take time. And I think that, it's just important, as Drew said, to just keep the optionality open for more sophisticated users to kind of manage those things themselves. So I'm really excited about that. I think it's early days for all of these things, from, institutional trading to, consumer use of Lightning. But I think we're making progress on all those fronts. And I think that's the most important thing, is just continuing to make progress.
Absolutely great point. Just continue to iterate, right? Continue to iterate, make progress, iterate, make progress. And I don't think people realize that. Like, look, the TCP/IP stack, guys, was not in the early versions of Windows and Mac operating systems. Guys, look, the actual TCP, you had to download several different, and there was competing TCP/IP stacks, like from different, like open source developers, let alone the web browser itself, of course, was not included. But the damn stack itself was not included. And so I think this is how I see, Lightning and Bitcoin playing out. The Bitcoin Lightning stack is eventually is this type of stuff all being built into either your operating system or your router or both. And it's just going to be seamless. And all of these complexities that we're arguing over now and things like that, of course, will all just be baked into the background into the future. So Nick, any final comments from you, sir?
Just a thank you to all the devs across Bitcoin and Lightning continuing to build.
Yes, big thank you guys. C Lightning team, Lightning Labs team, Async team, you guys all freaking kick ass. Thank you so much. And of course, all the wallet developers, you get so many out there, Jack Mallers with his app wallet, doing awesome things. So I think with that, guys, we can wrap it up. So let's go ahead and find out where we can find out more about these guys. Drew, where can we find out more about you, sir?
You can find out more about my company, Unchained Capital, which does Bitcoin-based financial loans and custody at unchained-capital with an A.com. You can follow me on Twitter. I'm DHRUVBANSAL.
Awesome, Drew. So make sure you follow them. And of course, guys, I'll have all the links and the Twitter profiles for these guys in the show notes below. Make sure you check that out. All right, Nick, where can we find out more about you, sir?
I am Time Value of BTC on Twitter and Medium. And you can check out some of my articles about Lightning Network interest rates on my blog.
Absolutely, guys. Drew and Nick have some amazing blog posts. You guys got to check those out. Make sure you check everything that Drew writes first. Make sure you check that out. But definitely all these guys here, Drew, Nick, for sure. Trey, I don't know if I've seen very many articles of you, sir. But where can we find out more about you?
Yeah, you can find out more about SparkSwap at sparkswap.com. It's a non-custodial Lightning Network-based exchange. We're live on mainnet with Bitcoin and Litecoin right now. And I'm on Twitter at tgriff3, TGRIFF3. I do write some blog posts, but mostly about kind of the technicals underlying Lightning Network atomic swaps, which maybe has sort of a limited viewership and appeal. So yeah.
Awesome. Well, then definitely, guys, check out all these guys' posts below. They have awesome material, and also we've had all three of these gentlemen on the show before, interviewing with their own companies and on the weekly Bitcoin news show. So make sure you check out all that previous content. We have tons of content here, guys, on the CryptoCast Network. Make sure you go check out all that out. Lots of good stuff. But we really appreciate everybody joining. We hope that you will join us again. We try to do the show every other week or so, and we have more shows on the channel coming. A couple are on break, but a couple more are coming. So we really appreciate everybody here. I hope you guys join us again. Until next time, please keep talking Bitcoin. We'll see you guys later. Bye-bye.